So you want to invest in cryptocurrencies, but you can't do it in your retirement plan or a traditional brokerage account? We've got just the thing for you. We're going to talk about a newly launched crypto index ETP that offers you a piece of this fast-growing market. Up next, Matt Hougan at Bitwise, right here on ETFguide TV. Hi there, everybody. I'm DeLegge with ETFguide TV. Before we go any further, be sure to watch our other weekly episodes like ETF Battles and the Portfolio Report Card. And do not forget to subscribe. We know that 99% of all statistics only tell us 49% of the story 100% of the time. But that still didn't stop me from trying to unearth some numbers that indicate the huge upside in cryptocurrency investing. Here's a stat. The global marketplace for gold is around $9 trillion, whereas the total market size for all cryptocurrencies, including Bitcoin, is just over $1 trillion. Now, based on these numbers, it would take an 8x return for the entire crypto marketplace just to catch up with gold. You want to talk about huge upside potential? We know it won't be a straight line up, but therein lies the opportunity. And today's guest is Matt Hougan, Chief Investment Officer at Bitwise Asset Management. They're a San Francisco-based firm with a lineup of crypto-linked index funds. Matt, thanks for joining us.
Thanks for having me. Delighted to be here, Ron.
So Bitwise is focused on bringing cryptocurrencies to the investing masses. And while many people may own some of these core asset classes like stocks and bonds and real estate, they probably don't own any cryptocurrencies like Bitcoin or Ethereum in their portfolio, or if they do, it's a very small percentage. So that's starting to just change. So why do you believe that the securitization of cryptocurrencies like Bitcoin, Ethereum, and others is such a big deal?
Look, crypto can be a very valuable alternative asset in portfolios. It has high potential returns, low correlations to other assets, and liquidity. That's sort of a magic trio, Ron. It's hard to find those three things in the same asset class. Of course, it also has significant risks. One of the challenges historically for crypto, though, is it hasn't fit very well in traditional brokerage or financial advisor platforms and operations. You could buy it on your phone on an app, but who wants to carry around real money in a phone in their pocket that they might lose or that might get hacked into? People want, at least some people want it in a fund structure. We don't yet have a Bitcoin ETP. We don't yet have a crypto ETF in the US market, but we have been able to see the trading of OTC traded trusts, including one from Bitwise, one from a number from a company called Grayscale, that allow you to access crypto in a brokerage setting. Now, there are risks to it. They can trade to premiums and discounts, but for certain investors, it can make sense as one way to get exposure.
So let's talk about the Bitwise Crypto Index Fund. This is the Bitwise 10, and ticker symbol BITW is the ETF ticker or ETP ticker. And so tell us a little bit more about this product, which is, I think, a real groundbreaking product, because instead of just tracking one digital currency or crypto, it tracks multiple. Tell us a little bit about the approach.
That's exactly right. It holds the 10 largest crypto assets weighted by market capitalization, as long as they can be safely held in an institutional setting with an institutional custodian. And the reason we love market cap weighted diversified exposure to crypto, well, there are really two reasons. One, different crypto assets do different things. I mean, you know this. Bitcoin does something very different from Ethereum, which does something very different from Chainlink, which does something very different from Uni. People don't know that much about the crypto space, but it's kind of like the software space, right? Microsoft is a great company, and so is Salesforce, and there's reason to own both. So the crypto index fund allows you to get exposure to the 10 largest assets by market cap. The other thing I would say is this is a disruptive, new, groundbreaking, risky, ever-changing marketplace. And like any disruptive technology, it's hard to pick the winners, right? Is this the MySpace of crypto? Is it the Betamax of crypto? Or is it the category killer? Is it the Amazon, the company that went first and is always going to be the largest? The beauty of a crypto index strategy is you get exposure to the market however it plays out. And so we're just trying to make it push button easy for people to not have to due diligence individual assets or have an opinion on whether Cardano is worth holding in a portfolio. just own the market like you would an S&P 500 strategy. And that's what an index-based strategy tries to do.
As you know, the safety of digital assets is a crucial element to this type of investing. So where does Bitwise custody the coins held inside of its funds? How are they protected from hackers, and are they insured?
Yeah, it's enormously important. Custody is a huge issue in crypto. Obviously, everyone's read the stories of people either losing their passwords and therefore losing their crypto, or exchanges or other features being hacked. What Bitwise does is we work only with a regulated, insured, third-party institutional custodian. In the case of our index fund, we're working with Coinbase Custody, which is a separately owned, wholly owned entity of Coinbase. They're the largest crypto custodian in the world. They have insurance on their assets from Lloyd's of London, and we work very hard to make sure those assets can be as secure as possible. And I would just say to any investor out there, security is paramount in the crypto space. So do your diligence there.
BitW's share price is trading at a large premium to the value of its net assets. So just give us an update on the level of that premium. Where are we at? And then give us some points of reference. How does that premium compare to some of the other crypto trusts like GBTC or GLDC? Tell us more.
It's a great thing, and it's one thing I want every investor to understand about these products. Look, we're all longing for the day when there is a true Bitcoin or crypto ETF that trades close to or at its net asset value that will make it push button easy. Until we get to that day, you're dealing with different approaches, and each of which have different challenges, right? Holding money on your phone doesn't integrate with your custodian. It has security risk. Buying a private placement fund, like some of the funds Bitwise uses or runs, has a lot of paperwork challenges and only available to accredited investors. Funds like BITW that trade on the OTC markets can trade to large premiums, and those premiums can be variable. So we post the premium on the homepage of our website. You can go there. It's updated on an hourly basis. You can see the estimated net asset value of the fund and the market price. Right now, the NAV of the fund, the estimated NAV, is just under $35, and the market price is $63. So that is a large premium, and investors have to evaluate that premium and consider if it makes sense for them to buy this product or buy another product. We don't control the premium. It can go up, it can go down. The funds could even trade to a discount. It's just another access point, and it's right for some investors, and it's probably wrong for other investors.
Are the premiums and discounts, Matt, in crypto-linked ETPs, is that a function of investor sentiment, or is it due to the mechanical operations of the product?
I think the answer to that is both of them, right? So one thing about these OTC traded trusts is they don't have a redemption feature, and additionally, newly created shares have to be seasoned for a year or 6 months in the case of certain funds before they can be released on the market. So what a premium is expressing, I believe, is there is more demand for the shares of BITW than there are shares that are trading on the open market. And it's just critical that investors understand that. Again, it's great that we're opening up access. It's great the other companies have opened up access. It can be right for some investors, but you have to evaluate it over time. There are other trusts. You mentioned them: GBTC, GDLC, ETHE. There are a family of these trusts, and you can always check out their premiums and then decide if it's right for you.
If the SEC eventually approves cryptocurrency products, and I believe, and you probably do, that they will, if they do that with the traditional ETF structure, what would that mean for products like BitW that use a trust structure? Is it possible these trusts would convert to an ETF share class to tighten or eliminate those premiums and discounts of the trust market price or net asset value?
It's such an exciting question because we're all hungering for the days when we have this crypto ETP, right? I think a few things are important to say. I'm very close to this process. I feel fairly confident in saying the first product through the gates at the SEC, if they approve a crypto product, will be Bitcoin only. Bitcoin is the most developed market. There's a regulated future on the CME, has the most robust custody, the most robust regulations. So they're probably going to go there before they go to an index-based strategy. So I think that's a valid question to ask, particularly for Bitcoin-only OTC traded trusts. And there's one from Grayscale. Bitwise is in the process of bringing one, hopefully, to trade that will have a lower expense ratio. Those are ones where there'll be one-for-one competition, in my view, with traditional Bitcoin ETFs, or at least something close to that. An index fund is a bird of a different feather, and I think it'll be a while before we see an index-based crypto ETP. I think that's down the road.
One final thing before you take off. There's been rumors of bans, government bans on Bitcoin. There was a rumor about India, coming in and banning cryptos. What should investors know about that?
Yeah, I think it's certainly possible to see one or more countries, particularly in emerging markets, have a reactionary regulatory ruling against crypto assets like Bitcoin. The reality here in the US is we've made enormous regulatory progress over the past 4 or 5 years, from the point where Bitcoin and Ethereum and other mainstream crypto assets really existed outside the regulatory system, to the point where the travel law applies to them. They're regulated by multiple entities. And it's not to say that there is no regulatory risk, but there really isn't a historical precedent for something like the US banning an asset like Bitcoin. In the past, they've seized gold. They were on the gold standard. That doesn't really apply to crypto. So, one of the risks you take on in crypto is regulatory risk. It's been attenuating for the past 10 years. And I think that's been a driver of returns. It still has a while to go. A lot of what we're talking about here, Ron, is that this asset class isn't as mature as other asset classes. It isn't as mature as gold. It isn't as mature as equities. It isn't as mature as bonds. That's also part of the potential upside, right? So that is part of the risk spectrum of the upside. Regulation is something I think about, but it's actually not my top concern in the crypto space.
Well, Matt, we've just scratched the surface, which means we got to have you back.
I'm in.
So I look forward to catching up with you. Keep up the good work.
Thank you. This was fantastic. Thanks to everybody.
I'm Ron DeLegge with ETFguide TV. Check out Bitwise. We'll catch you next time.